Even yesterday, we were talking to Mike
Cal.
Novogratz about crypto, and he said, while obviously bullish, he does think that it's looking frothy, and he said the same thing for the S&P 500. So for those with the, then I saw, who was it? Mobusan has a paper out again. Everyone's talking about the Buffett indicator. I mean, there's a lot to worry about if you're worried that we're over our skis here.
Well, we always worry. I worry when I don't worry because that means I'm being complacent. But if you look since the election, Cal, the S&P's up 5.5% and the Nasdaq's up 6.7%. These are big, big numbers, but I think it's because it's healthy because we have strong economy, right? 3.3% Atlanta Fed tracker is what the current reading is for this quarter. We're probably going to do about 2.5%, 3% for the full year, which is amazing after the 3.4 last year. So you have good growth, but I think it's an expectation of more growth coming next year. Maybe it's not an acceleration, but maybe it's just kind of a 2.5%, 3% environment that we are in from the Trump administration, because there's a lot of puts and takes, and there's a lot we still don't know. But the point being is growth is there, and it's being driven by the very healthiest part of GDP, which is the consumer. And the consumer continues to hang in because even though today's jobs number were a little mixed, overall this week we had pretty decent job numbers, jolts and initial claims and even ADP, services versus goods. So there's a lot of moving parts, but jobs are still there. Wages are actually good for the consumer. I know it's hot on inflation, but 4% is a pretty healthy number for the consumer, especially as inflation has come down a bit. So add it all up, and oh, by the way, throw in a better ISM manufacturing number, and that's going to start to contribute in 2025. You have a decent economy, good growth, about 8 to 10%. Yes, the market is expensive, but there are a lot of sectors, a lot of specific stocks that are not as expensive at 22 times.
And I assume you assume that the Fed is going to continue on its downward trajectory on interest rates, which can only help equities, I would think.
Yeah, Tyler. I mean, I think it's going to be less than what I think most people were expecting initially. But maybe we get the December cut. Maybe they take a pause for a bit. We see some of the data. Clearly, inflation is stubbornly staying, if you will, at 2.5%, 3%. Yeah. And if that's the case, we're probably going to see a slower Fed cycle. But I don't think that that's alarming because I'd rather take higher growth.
And you know, another reason why it shouldn't be alarming is because we went into 2024 with lots of people expecting 7 rate cuts this year, 6 or 7, and we sure didn't get that. And look at where the stock market is. We've had, what, 2 cuts so far? We had one in September and one in a month ago. But otherwise, but we came into this year expecting a big downward pressure on rates, and it didn't materialize.
100%, and that's because growth was better than expected, and margins were actually were good, right? So we had 8 to 10% earnings growth, which nobody thought we were going to do. And so, you know, our friend Larry Kudlow taught us this long time ago: stocks follow profits on the way up and on the way down.
Steph, you're talking about, like, listen, chase, or how do you put it? Let the winners ride, which I think is a nice way of saying for people who are a little nervous about their stocks. Let them ride. Amazon, if you're energy transformation, even the financials, you're saying let it ride. But when it comes to opportunities for 2025, there are some stocks that have not had a great year. And it makes me nervous when I have to see Target and think, I don't know, maybe you see something there that we don't. Las Vegas Sands, okay, it's up 11% this year. Zscaler's down 5%. Why do you think these are going to become better stories in 2025?
Well, I think each of these stocks individually have stories in themselves. I think they can see improvement. I think they got oversold. But so Target, it's not. For sure, it is not a traffic problem. They had 2.4% traffic growth. Transactions were the problem. And then they had this one-off expense hit because of ports. So, yeah, it's management credibility for sure, but I think they can get margins back to 6% from 4.6. That gets you $9, $10 in earnings power. Las Vegas Sands, it's really about Macau recovering. And it is recovering. We're seeing double-digit GGR each month. It's about them fixing the renovation problem. So they did renovations all year long. They lost market share. That stops next year. They have a spring analyst day. I think that's the catalyst. Zscaler, Kelly, I've never owned Zscaler, but the stock is really, I think, very attractive given that cybersecurity is such an enormous total addressable market. I think cybersecurity is even bigger than AI, unfortunately. And I think you're going to see the big 10 players continue to gain market share and win. And these guys just beat and raised, and the stock fell 7%. So that's when I kind of took advantage
why has that one not participated when so many of the others, some of the other security stocks have done pretty well?
Yeah, I mean, I think it's the billings numbers that have been underwhelming, but it's the annualized recurring revenue that I care more about, and that's poised to accelerate to $3 to $5 billion in fiscal 2025. And I think as they do that, the stock should recover. And again, overall, it's not a demand problem, Tyler. I mean, there's plenty of demand.
Yeah.
Right? So anyhow, so I'm just trying to pick away some names that can maybe mean revert. Not my entire portfolio.
I love mean reversion. I just love it.